This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily for this Thursday, February 5th, 2026. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Got to say, an interesting trade here, bouncing around here, but weak jobs data certainly adding to an already nervous trade over artificial intelligence. The spend, the impact, I think we're trying to figure it out as investors, what's going on.
Yeah, we're going to have more on the trade in just a moment. But we've got a great hour coming up here on Bloomberg Business Week Daily. We're covering all that and more. It's time to break out your Norse mythology. Nobel Laureate Paul Krugman asks, is this crypto's Thimble Winter? He's going to join us in just a minute.
All right. Plus, we've got Jurrien Timmer, Director of Global Macro at Fidelity Investments, on quite the start to 2026. That start including Bitcoin now below easily 70,000 at 64,000 and change. So that's going to be woven into a lot of our conversations on this Thursday. Also,
the CEO of Brooks Running, Dan Sheridan, is going to be joining us. It's a Berkshire Hathaway-owned company. He's going to weigh in on the health of the consumer and the industry overall.
And remember I mentioned those AI concerns, the impact? Well, we've seen that playing out in the software space. We've got the CEO of one such software company who has the share price has definitely taken a beating over the last 24, 48 hours. She's going to weigh in on the AI fears. All of that to come over the next 60 minutes. First up, though, let's get a check on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Amazon after the bell with the Dow, the S&P, NASDAQ very much in the red. Right now we have got the S&P down 1.1%. Volatility lashing Wall Street. Dow Industrials down 1.1%. NASDAQ down 1.3% with a VIX above 21. 10-year 4.20%. Spot gold down 2.1%. 48.60 the ounce. Right now we've got silver plunging 13.6%, 76.20, and Bitcoin down 9.2%, 65,935 on Bitcoin. Briefly, after earnings, Alphabet down 2%. After earnings, Qualcomm down 7.7%. ARM Holdings higher by 7.4%, and Microsoft on a Stifel downgrade, down now by 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bitcoin tumbling below $70,000. In fact, right now we're just below $66,000 as the unwinding of leverage bets and broader market turbulence deepened a sell-off that has wiped out all of the gains since President Donald Trump's election just about a year ago. Bitcoin now down close to 50% since that October 6th high. Something that caught our attention, Tim, you talked about it all this morning on our morning call, a Substack from Nobel Laureate Paul Krugman, who comes to an interesting conclusion that we want to talk about. And he gets into, if we're going to have a crypto crash, best to get it over with now before the industry becomes too big or too politically powerful to fail. We definitely want to ask him about that.
Let's bring in Paul Krugman, Nobel Laureate in Economics, research professor at the City University of New York's Graduate Center, author of a popular Substack, more than 500,000 subscribers. People are following him. His writings are a must. He joins us remotely. Professor, good to have you with us. You argue, or ask the question rather, is this crypto's Thimble Winter? Do you think it is?
So I got a little, we have talked about crypto winters a few times in the past, and I got carried away with the winter metaphor. And in Norse mythology, the Thimble Winter is the final disastrous winter before Ragnarok, the end of all things. Crypto, it's a really weird space, right? If you ask, how is Bitcoin value compared to fundamentals? Well, what fundamentals? It's kind of all vibes. And it has bounced back several times from big declines because people had faith in it, and because it was, there was a lot of ideology behind it. But this time looks different. This time, a lot of the recent rise has been driven by Strategy Inc. and other crypto hoarders. A lot of it has been political, associated with Donald Trump. Everyone is comparing the price now to what happened when he won the election, and those things are harder. The kind of sentimental or almost mystical attachment that people have had to Bitcoin itself probably doesn't apply to shares in strategy. Probably doesn't, and the kind of libertarian ideology that supported Bitcoin doesn't really apply now that it's largely a political creation, and it's in some ways tied to what you think Trump's future prospects are. So this is different.
I think about this a lot, Professor Krugman, and I think about supply demand, certainly when it comes to trades in assets. I'm not quite sure what you call cryptocurrencies. I think we still struggle with what it really is. Having said that, if President Trump wasn't in the White House, what's your view on whether or not crypto would be, here around $64,000? Would it be a very different trade potentially?
Well, it might be. I don't think it would have gotten up to 125,000 or thereabouts without his election. It's possible that the day of reckoning might have waited longer. I mean, there was in some ways, the very prominence of crypto, the huge attention given to it, all of the hype about this is a crypto-friendly White House has in some ways, led to a big run-up, but also focused people's minds. And I think there's a lot more. So what is this actually for anyway? Mm-hmm. And there's also, the Sell America trade, the debasement trade, which among other things, first of all, should have benefited Bitcoin if it was the kind of refuge asset that people had sold it as, but also the fact that a lot of people sold Bitcoin as being the next gold. And it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold. Not Bitcoin. I think it's a big wake up for people that maybe this isn't actually going to be an enduring asset. So it's really, really hard. If you ask when people make price forecasts for Bitcoin, I always wonder on what basis.
Yeah,
it's not like you could do a price earnings ratio on this thing because there's no earnings, no services. It's all just pure faith. But it does feel like we're seeing a real crisis of faith right now.
What would stop this administration, in your view, from coming in and bailing out the industry? I mean, the industry spent a lot in 2024 to get pro-crypto politicians elected. It was successful in many different cases, particularly in the Senate race in Ohio, unseating Sherrod Brown. Some Republicans want Scott Bessent, the Treasury Secretary, to buy Bitcoin by selling some of the U.S.'s gold reserves. When asked whether the U.S. Treasury has the ability to bail out Bitcoin, the Treasury Secretary said this week he doesn't have the authority to buy Bitcoin with tax dollars. Could the president do that?
Well, yeah. I mean, in general, Scott Bessent, his word is not good as gold, let's say, on these things, and they could. But I would say, look at the parallel. The U.S. spent a really fairly limited sum in bailing out Milei in Argentina. Relatively, it's a tiny sum compared with what it would take to bail out Bitcoin. And there was a firestorm of outrage over it. Not enough to stop them from doing it, but enough to really give pause. If they tried to step in and bail out this industry, especially given all the stories about crypto as a channel of corruption, all the stories about the Trump family being enriched through crypto, all of the buying of politicians, the pardons of crypto criminals, I think the political backlash would be huge. Now, maybe the crypto industry has spent enough money to overrule all of that, but I think it's highly questionable.
One thing I think about, Professor Krugman, is transparency to investors. It's something we talk about with everything. It's one of the things we're going through with private credit, right? It's why, although the U.S. market, financial markets may not be perfect, it is why it's in many ways the gold standard for global investors. Having said that, on that transparency issue, does it make sense, as we look at what's going on in crypto, that we really have a full understanding of the White House's exposure, the president and his family, to cryptocurrencies, to understand what's at stake for them personally, politically, financially, especially as policies unwind, and to understand maybe how that might be from a supply-demand metric and all that entails supporting this market, at least up until late?
Yeah, I mean, people are just making guesses at how much the Trump family is exposed. And other government officials, by the way. Let's not forget that the Commerce Secretary, Howard Lutnick, his firm was very close to Tether, which is very much in the crypto business, and particularly seems to be used for a lot of the unsavory aspects of that business. But it's certainly a significant exposure, and there's a kind of shadow exposure in the sense that the crypto industry has been throwing a lot of money, not just at campaign contributions, but at the presidential family directly. So another crypto winter would be financially harmful to the first family. But again, that's all sort of taken as a given that there's a stake there. I don't even know if it's a lack of transparency. We all know that there's a large personal financial stake in how crypto does. The question is, can they really get away with it? I mean, there's lots of things that have been gotten away with, but this is the kind of thing that really does get voters enraged. This is the kind of thing that leads to a lot of yelling at Republican members of Congress in town halls. So I'm not sure that this is something that they're going to be able to do, particularly because this is big, right? Crypto is still, even with the recent fall, it's still $2.5 trillion asset class. It takes a lot of money to bail that out.
We should point out on Howard Lutnick, his sons Brandon and Kyle now serve as chief executive and executive vice chairman of, respectively, of Cantor Fitzgerald, and that Howard Lutnick did divest to comply with ethics agreement he signed when he joined President Trump's cabinet. So we just wanted to kind of put that out there.
Yeah, that's right. I mean, he's not personally, but If my relatives were very involved in a business, people would not say that I had fully disconnected myself from it.
Hey, Professor, before we let you go, the promise of Bitcoin was this decentralized currency that would flow easily across borders, allow people to exchange value, and it would be not tied to a single government entity. In your view, does Bitcoin have any value?
No, or let me give a slight qualification. The places where Bitcoin has actually been useful to people, it's largely used for essentially criminal enterprise of some kind, but not all crimes are the same. And I will say that if you're trying to smuggle money out of Iran or something like that, then Bitcoin is a way around capital controls. But it's also a way, it's also a way that criminals who install malware on your computer and then demand a ransom, collect the money. In terms of the original idea that this was actually a superior form of money, it's a total bust. And it's a 17-year-old bust. That's the thing that gets to me. This is not an idea of the future. This is not a cutting-edge technology. This is something that is only slightly younger than the first iPhone, right? And if it hasn't made any inroads as an actual legitimate means of payment in 17 years, then clearly it wasn't a great idea to start with.
Although there would be many who might argue that the disruption takes a little while, but certainly hear you. An important view, as always. Paul, thank you so much. Paul Krugman, Nobel Laureate in Economics, joining us, research professor at the City University of New York's Graduate Center. He's got more than 500,000 subscribers on Substack. Highly recommend you check this out. We're going to stay on the macro and the markets.
I want to bring in Jurrien Timmer, Director of Global Macro at Fidelity Investments, $17.5 trillion in assets under management, $6.8 trillion in discretionary assets. He joins us from Boston. Jurrien, I want to start where we left off with Professor Krugman, and that's all about the effect of cryptocurrency, the decline in Bitcoin that we're seeing, and whether or not that has a wider effect. Michael Burry certainly warned of that earlier this week. Are you worried about it?
No, I think it is. There's a few things going on. And by the way, I do disagree with Professor Krugman about the inability to value Bitcoin, because you can make that same argument for gold. And even though neither of those assets generate a cash flow, you can value them, right? You can value Bitcoin on the size of its network. It is a network asset. And you can value gold on the basis of, it being hard money. So you can compare it to soft money. So if you do a ratio of the gold above ground value to the M2 money supply, it goes in a band, in a ratio, if you will, and you can apply the same logic to Bitcoin. So I do think you can value them, and I do that. I compare the value of both gold and Bitcoin to the money supply, And they've both run a lot. A few years ago, they were half the size of the money supply, but even gold on its own is now 35 trillion. The money supply is 23 trillion. Bitcoin is about 1.7 trillion in market value. So they've come a long way, and it's not that surprising that they're taking a rest. Bitcoin did form kind of its fifth wave, if you will, to 126,000. It was 105% CAGR over 145 weeks. At 65,000, I actually think it has some value again, but they're different players on the same team. They take turns, and that's exactly what we've seen. So, but coming back to your question, I don't think Bitcoin, its decline itself, will be a systemic event. The last time it happened, it wasn't. It is getting caught up in the speculative, first frenzy and then unfrenzy in kind of the meme stocks and the non-profitable growth stocks, the other speculative names, and of course we have the treasury, those treasury companies that are really hurting right now. So it is part of a bigger picture, but I don't think it's going to lead to a systemic, sell-off in assets in general.
Okay, cool. And with today's decline, down 9% right now, the market cap of all of Bitcoin is falling pretty quickly. It's at about 1.3 trillion as we speak.
Yes.
So, Jurrien, what would you rather own, Bitcoin, gold, or stocks?
I actually like them all. I mean, the stock market is the stock market, and that is the best compounder over time. They do generate cash flows and earnings. You can value them. Most of the stocks around the world are not expensive. The S&P is, but that's because of basically 7 names that are trading, in the mid 30s. But the equity market is a undisputed compounder over time. I think, in my view, it should always be the anchor asset in any portfolio. And then beyond that, I see gold and Bitcoin and commodities in general, as well as alternatives as basically diversifiers, assets that generally are uncorrelated to both equities and bonds, and certainly gold fits that bill even more so than Bitcoin. So I think they all have a place, and especially in a world of fiscal dominance where maybe debt gets debased over time, we get maybe a closer cooperation between the Fed under presumably soon to be Kevin Warsh and the Treasury under Scott Bessent. If there's going to be greater coordination in terms of managing the debt load, I can see the argument for harder assets. And I think gold and Bitcoin, again, I see them as different players on the same team. But again, I don't think either one of them compares to equities over the long term.
Just got 30 seconds, forgive, and you've got to come back soon. But the AI trade, it does feel like we're having a little bit of a reckoning, certainly when it comes to software. 30, 40 seconds on your view there.
Well, so AI, of course, is perhaps the greatest technological innovation we've seen in a long time, if not ever. But there's also a lot of unknowns. And I think, because that market has ramped up so high that whenever anything goes wrong, you can see the rationale for everyone sort of exiting first and asking questions later. But we've seen this before. We saw this even last November. We've seen it before that. So I think the promise of the technology outweighs the volatility over the near term.
Perfect. Mark your calendar. We're going to call you again. We want you back real soon. Jurrien, thank you so much. Jurrien Timmer, Director of Global Macro at Fidelity Investments, joining us right here on Bloomberg Businessweek Daily.
Hey, coming up next, we're getting a view on the U.S. economy. The CEO of Brooks Running stops by. It's a Berkshire Hathaway-owned company. Dan Sheridan is next. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got Bitcoin right now just above $66,000. Bitcoin down 8.9% today, a topic we were just discussing with Paul Krugman. Bitcoin, $66,100 right now, down $6,500 per token. Again, Bitcoin plunging now by 9%. The Dow, the S&P, NASDAQ, all in the red. Volatility lashing Wall Street as a bout of heavy selling. Laid low software stocks, crypto plunging. Again, the S&P down 51. Right now, 68.31 on the S&P. That is a drop of 0.7%. Dow Industrials down 380. Drop there of 0.8%. To be clear, we are well off our session lows on the S&P. At one point, the S&P 500 index was down 1.5%. NASDAQ Composite down 0.8%. NASDAQ 100 down 0.7. The Russell 2000 index down 1.1%, and the VIX holding above 20. 10-year 4.20%, with the 2-year 3.48%. Gold down 2.3%, 48.52 the ounce. Silver's plunging 13.7%, 76.09 the ounce. West Texas Intermediate crude 63.40 a barrel, down 2.7%. And Bitcoin bears repeating, down now by 9.3%, 65,900 on Bitcoin. Peloton Interactive shares down 24.6%. Peloton tumbling by the most in more than 2 years after the company provided a weaker than expected revenue forecast for the fiscal third quarter, disappointing investors who had hoped for a recent hardware revamp. They were hoping that would spur a long-promised turnaround. Instead, Peloton today plunging 24.5%. Bottom line here, stocks running lower, S&P down 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Maybe we should connect Pelotons to data centers, like for energy. I'm just saying, it might be like a way of
I think there's
synergy.
a Black Mirror episode from a few years ago.
Is there?
Yeah, that's kind of like that.
All right, we want to get a look at the consumer and the ever-popular world of athleisure. When I'm not wearing this, I'm often in yoga pants, and also workout clothing. Hey, we want to do this with the CEO, Brooks. This is the latest data on the U.S. labor market showed U.S. job openings unexpectedly falling in the month of December to the lowest level since 2020. Layoffs edging up, adding to evidence of sluggish demand for workers. And then we also had U.S. companies announcing the largest number of job cuts for any January since the depths of the Great Recession back in 2009. That's according to the outplacement firm Challenger Gray and Christmas. So a lot to get to with our next guest. We do welcome back Dan Sheridan. He is CEO of Brooks, running the Seattle-based subsidiary of Warren Buffett's Berkshire Hathaway. Dan, how are you?
Hi, Carol. Thanks for having me back. Happy to be here.
It's great to have you here with Tim and me. Lots to get to. We're going to get to it. I got to say, with the backdrop of markets, though, and some nervousness out there, and Bitcoin's continued slide, I got to ask you about the macro. And I got to ask you, does anyone buy your sneakers with Bitcoin or crypto?
I think if they do, it's a very small percentage. You know, I think for us, we just finished our 2025 year and we grew 16%. So our consumer is very, very healthy right now. And it's rooted in the participation, which we've talked about in the past. More people around the world are running and walking, and Brooks is winning the runner at the cash register. And so our consumer is holding up.
We talked with you back in October. It was just ahead of the marathon here in New York City. Curious how your world has changed since then. What can you tell us about changes in consumer demand since then? Supply chain improvements or supply chain changes? The business outlook? What has changed in a few months?
Yeah, well, I think you always start with the consumer, and our consumer is very resilient. You know, we compete in maybe the most competitive category in sporting goods. We're the number one brand there. And what we're seeing at the consumer level is, because running is so important in their life, they trade off on other discretionary items. But the shoe and apparel always wins because it's so important in their life. And we're seeing it around the world, Tim. The consumer is very, very strong in our category. Our EMEA business was up over 20%. Our Asia business growing really, really nicely for us. And so it's not just a U.S. story here. It truly is a global story for us, and we're winning. You know, in terms of supply chain, we've seen it somewhat normalize over the last, call it 4 or 5 months. We had a lot of tension in the trade discussions, and we've got our arms around that. But I would tell you it's stabilized for us in our category.
Well, you know, and I do wonder, so in terms of tariff concerns, global supply chains, things have settled down, and you feel like where they are, they will stay that way for the next couple of years?
Yeah, we're hopeful. I mean, based on the signals that we track, we think we're in a solid spot right now. Now, What we know is that things are changing rapidly in terms of the discussion with the administration. But for our category, we have high tariffs. I think last time we were on, we talked about it. Our tariffs are extremely high for this category. And so we went to work on that through the whole value chain to get our arms around it. We're going to see some compression in terms of profitability. But in terms of the long-term vision, we think we've got our arms around it, and we'll continue to monitor.
Hey, I want to talk a little bit about China because in the fall, you told our Bloomberg News team that you were going to make a big investment in the next few years, 30 stores in China by 2027. China sales in 2025 for your company up 245%. At the same time, Nike, Adidas, Lululemon, they've been struggling in China. What are you doing differently?
Yeah, again, it starts with the consumer. And what we know about the Chinese consumer is as the middle class is growing, this is the perfect time for a brand like Brooks to enter. We deliver fantastic performance product consistently over time. We have a brand energy that resonates with the Chinese runner. And we're engaging in the communities that are part of the run community over there. And so the store is central to that in China. And so our rollout of stores is a big part of this. But we're having a lot of success online with those running communities, and we're new entry into China. So the growth we're experiencing is incredible, and it's just a testament to how we enter markets and how we execute. Our team is executing really, really well over there.
It does sound really good, and I am curious about longer term future plans. You are obviously part of the Berkshire universe and have been for a while. Would you guys ever consider maybe an acquisition to expand into some of the adjacent categories? Talk to us about kind of expansion and strategy plans. And we're also always curious, like, could you guys go public at some point? Or do you think that you're going to stay within the Berkshire homestead for a while? More.
Boy, Carol, I hope we stay forever with Berkshire, and I believe we will. The biggest advantage we have at an ownership structure is Berkshire Hathaway. I talked to you about this last time. We're so fortunate to be owned by Berkshire, and more importantly, I as a CEO have a very long time horizon that I focus on because of our ownership, and that's a benefit to us in every decision we make. And so ownership matters in business. We're lucky and fortunate to have the ownership of Berkshire Hathaway, and we continue to take a long-term approach to this strategy. When we enter markets like China, like in Europe, and the exposure that we have there and the growth that we have there, the fact that we can focus on 10 and 20-year horizons here is very different than our competition, and I don't take that for granted.
That's actually very Chinese, if you think about it in terms of strategy.
Last time we spoke with you, Warren Buffett was still at the helm of Berkshire Hathaway. Now it's Greg Abel. How is that going so far? How does his leadership compare to Buffett's? What's he like? What are his priorities? What has your contact with him been?
Yeah, I would tell you the word that comes to mind is consistent. It's consistent with the culture of deserved trust and empowerment. Greg has always led with that. It's consistent with in terms of how they think of the subsidiaries. And so Greg is a very consistent manager and will remain that for us. I believe that. I had a unique opportunity in December to travel to Omaha and spend some time with both Greg and Warren, and now Adam Johnson, who's now leading our division. And I could tell you that the same things are true throughout the leadership at Berkshire, and what an advantage for Brooks.
Hey, one of the things, and we're talking with Dan Sheridan, CEO of Brooks Running, joining us from Seattle, Washington. Dan, we talked about the Chinese consumer, and sounds like things are going really well. I would love to know, what is the breakdown between Europe, China, the U.S.? And I want to just, if we can kind of drill down a little bit more into how the U.S. consumer is doing.
Yeah. So for our business, Carol, the U.S. is our largest region.
Right.
About 80% of our global revenue comes out of the U.S. And that's why it's so exciting for us in terms of the growth that we see ahead. We are very meaningful in the European market. We're the number one brand in Germany now in performance run. It's been a 10-year vision of ours to achieve that. And we're, as I said, we're just getting started in China. So when we look at the total addressable market, it's a $48 billion market in terms of run. And, you know, where we invest is in the top countries where running is exploding. And so the markets that we're set up in are the ones that we're investing in. And Western Europe's a big investment. China's a big investment. And as I said, the consumer's super healthy there. It's rooted in participation. You know, what we track are participation metrics. In the US, there's about 50 million runners that run twice a week. We think globally that's close to 200 million people that are choosing this activity, and Brooks is winning with that consumer. So the consumer is super healthy.
So on the consumer and the consumer choosing Brooks, why are they choosing Brooks from a technological perspective rather than a competitor such as Hoka or Nike? So what is the differentiator with Brooks Running's technology?
I love the question, Tim. This is why we exist. We're a product company first and foremost. And so innovation for the runner is why we win every single day. We spend hours, months, years researching the biomechanics of human motion. We are in the business of keeping people healthy, running farther, faster, longer. And we've been able to do that consistently. We're in our 25th year of 14% compounded annual growth because of the position we have in product. So we win first and foremost in product. The second thing is we execute really well as a business. As you can imagine, global supply chains. We sell in over 55 countries around the world. We have developed a supply chain and an operation excellence that we think wins in every market. And that's not easy to do. That's the really hard part. And then this brand speaks to runners. We're an authentic, relevant brand that understands the journey of runners around the world. So when they're looking for a brand, they find authenticity in our brand. And that combination works in every market we've gone into. And so we often say we study our competition, but we really obsess on the consumer. And we've been able to stay ahead of the consumer in product, in execution, and with our brand ethos of let's run there. And it's working in every market we're competing in.
All right. So appreciate getting some time once again with you, Dan. Dan, be well. Thank you so much. Dan Sheridan, of course, he's the CEO of Brooks Running, joining us there from Seattle, Washington.
I'm taking a look at what's happening in markets right now. Bitcoin extending its decline down 9.4%, trading at 65,800 right now. We're seeing red across asset classes too. The S&P 500 off its worst levels of the day, but still down 1%. The NASDAQ composite down 1.3%. Amazon, after the close, we'll see if that changes the tone.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all trading lower. We begin with the S&P, keeping it all in context, down 1% right now at 6811. Dow also down 1%, down 456 points. At one point, we did have the S&P down 1.5%, recovering now down by 1% off session lows. NASDAQ down 1.3%. The NASDAQ 100 index faring a little bit better, down 1.1%, while the Russell 2000 index of small cap shares is down 1.4%. The VIX back below 21 with a 10-year at 4.20%, the 2-year 3.47%. Spot gold hit hard today, down 2.6%, gold $48.31 the ounce. Silver plunging 15.4%, now with a $74 handle, $74.60 on silver. Crude down 3.1%, just above 63 a barrel on WTI. Bitcoin, the big story, plunging 9.5% right now. Bitcoin 65,734. Stay with Bloomberg for the very latest on the sell-off in crypto. Earnings news. Ralph Lauren's sales growth decelerated in the most recent quarter. Shares of Ralph Lauren down now by 5.24%. Estee Lauder's outlook boost failed to reassure investors about the pace of the cosmetic conglomerate's turnaround. Estee Lauder is plunging 21.2%. Sweet outlook, though, from Hershey. It offered a better than expected 2026 outlook. That news sending the stock higher. Hershey right now up by 8.6%. Amazon, after the close of trading, we're going to be all over that on Bloomberg Television and Radio. Amazon down now by 4.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much. Charlie Pellet right there with the Bloomberg Business News Flash, following the markets for us on this Thursday. Hey, one of the things that we took note of was Microsoft hit with a rare analyst downgrade in the latest sign of how caution toward software companies is even spreading to some of the biggest and most influential names. Now, mind you, perspective always important. About 96% of analysts, Tim, still have buy equivalent ratings on shares of Microsoft, with the average analyst price target indicating upside of about 45% from Microsoft's Wednesday close. So it's not like the street's running away from Microsoft, but still, it's a rare downgrade.
Well, Microsoft is one example, but I think the concerns about cloud growth and spending resurfaced because there's a growing concern now that AI represents a severe headwind to the long-term growth prospect of software companies. A popular ETF that tracks the sector has dropped for 7 straight sessions. It's lost about 15% over that stretch. Our next guest in the software space, Sukhinder Singh Cassidy, CEO of the cloud-based accounting software maker Xero, trades in Australia. Sukhinder, welcome back. It's nice to have you back on here. We wanted to start with everything that's been going on over the past few days. The concern that was really sparked by Anthropic's Claude coming out with this tool that allowed legal analysis that for a long time was really the remit of specialized companies. And it got this conversation started. Hey, some of these SaaS companies are really at risk, some say, because of what AI and AI tech can do. Is your business at risk?
We think for us, AI is a net TAM expander, including the tools offered by many of the powerful LLMs. Now, the question is why? I think when you think about companies like Xero, we are the system of record. We are the collector of data for the SMBs who work with us. So it is not just about the software. It is about the data you provide. It is about your domain expertise in your vertical. It is about your ability to take the power of these tools and translate them for your customer and your customer needs set. And of course, it's about the trust, privacy kind of layer that I would say the 99% of SMBs in the world who are not builders of technology will look to companies like Xero to make accessible to them. So we see an opportunity for TAM expansion in our markets.
And when you say TAM expansion, you're talking about total addressable market. And when you talk about SMBs, you're talking about those small and medium-sized businesses, which you guys cater to. Please, go ahead.
Yes, sorry for the acronyms. And to your point, I think we see all of these powerful tools, including from the horizontal players, as technology we need to take advantage of, as well as building proprietary technology in order to make it understandable for the 99% of SMBs who don't go to work in the morning thinking, I am going to build tech software. They're thinking about their business.
To be fair, I mean, everybody that we talk about with this impact that we've seen on some of these SaaS companies, these software as a service companies. And we've talked with our own Mandeep Singh of our Bloomberg Intelligence team, who says software is not dead. Like, let's have some perspective. At the same time, in terms of the AI spend, build, and impact in particular, we're early on in this game and this change and this disruption. So is it fair to say that there is going to be some disruption and that maybe some of what you do may be replaced by AI or some of these AI chat programs, if you will?
I think I would say it differently. I think that AI technology is something we at Xero also take advantage of. So we're, building our vertical domain LLMs on top of the powerful technologies coming out today. Because what our customer needs, again, I'm going to come back to, we're a financial operations backbone for small businesses who 99% of the day don't wake up thinking about technology or, quite frankly, financial operations. They want to spend the majority of their time thinking about their business. And for them, we need to be a force multiplier. So think of us as the translation layer for that small business, taking advantage of both proprietary data and the power of these horizontal technologies.
So Xero stock slid close to 16% in Wednesday's session in Australia, bounced back a little bit today, up 1.6%. Yesterday's sell-off over concern, was that overdone?
I think that the market right now is not distinguishing between the many types of software companies and the position they play with their customers. So I do think that the broad sell-off does not really distinguish between the value propositions of different software companies. So for us, we did an investor briefing on Monday about how excited we are about using AI technology and being the layer that brings that to our customers with a domain-specific use case that can be multiplied, we think, with the use of this technology.
It's interesting, and there was, I think it is Financial Review, where you gave an interview, and they did a story on you guys just this week. And in a presentation to investors, you were cited as saying that you used Anthropic's Claude coding tools to try to clone Xero. Tell us about that. Tell us about investor reaction, and what are the questions you are getting from investors?
Sure. So first of all, I use all the tools. I think if you're a CEO in today's age, use the tools, understand the power and the limitations of the tools today and how they're going to get more powerful. So when I used it, it was very easy to build a simple reconciliation. But when I tried to have multiple agents, they prompted me to go build much of the technology Xero has. A good example would be, hey, it's great that you gave me your bank statement, but I need you to be able to plug in multiple bank feeds. Well, of course, that's the data layer I'm talking about at Xero. So I like using these tools because I think our job is to understand the power of this technology and harness it, not be afraid of it. Now, in terms of other questions investors are asking us, look, we have had and continue to enjoy, I think, strong long-term shareholders in Xero. I think when we gave the investor briefing on Monday, I think they were excited to hear us talk about our differentiators and excited to hear us, quite frankly, talk about AI adoption on our own platform. We use multiple LLMs behind Xero's own AI technology. We call it JAX. And we shared with them the early adoption figures on Xero. 300,000 of our customers are already using new Gen AI features we launched within the last year. And of course, over the last 20 years, we've used traditional AI and have well over 2 million customers using traditional AI at Xero. Again, all harnessing the powerful technologies being built. And so I think this is, again, very critical in understanding our position in the market.
Sukhinder, just in the last 30 seconds that we have with you, one of the reasons we like speaking with you is because you have these small and medium-sized businesses all over as clients. What can you tell us just about the current health of their businesses and different areas of strength geographically in this economy?
Yeah, look, I would say small businesses are showing durability in this economy. I'd say in the Southern Hemisphere where Xero was originated, Australia, New Zealand, over the last year, our own data shows some final real-time return to growth. In the U.S., you have a remarkably durable SMB, as you know, despite tariffs, despite uncertainty, the optimism index by the NFIB remains at close to all-time highs. So we see durability in the UK where we operate. Small businesses continue to need and get a lot of support from the government on digitization.
Great
to
check
the different factors.
Great to get some time with you, Sukhinder Singh Cassidy. She's the CEO of Xero, joining us on this Thursday. Hey, when we come back, a check on the trading day and stocks on the move. You're listening and watching Bloomberg.